Reserve Bank of India has announced a 25 basis point cut in the policy. Now, the important thing to note here or not, whether or not banks will pass on this to consumers as the system loans are linked to MCLR as also repo linked rate. To discuss this, I have with me Mr. Ashwini Kumar Tewari, Managing Director at State Bank of India. Mr. Tewari, welcome to ET Now. My first question to you will be, how does the maths look for you with 25 basis point cut?
Thank you and good morning. This is entirely on expected lines. We were expecting our house was also a 25 basis point cut now, and so therefore to that extent, this is aligned to our expectation. In terms of impact, I think the external benchmark linked loans, which is repo, these loans will get repriced immediately, and we will start to offer them very quickly. Deposits obviously will be repriced with a lag, because the new deposits, after we have decided to cut, the new deposits will start to be repriced, but the older ones will continue. So initial, as always, the impact of this in terms of margin pressure will be there initially, but it will all level out after some time.
Right. I also want to ask you regarding the commentary which has been made on a few of the norms like ECL norms, project financing. He did mention in the beginning that there will be a phased implementation. How do you read the statement? Because some of the implementation as per draft guidelines was 1st of April 2025.
So we are not very sure about the implication of this, because both in terms of ECL draft which was published, it already mentioned a 5-year roadmap, and for LCR, of course, no such thing was mentioned. But they have been generally saying in our conversation also that whatever time is needed in terms of implementing the system changes, and also if there are large provisions to be made, all of them will be spaced out. So in that sense, we are okay with that. But let us see when this gets implemented and to what extent, because we've all given our feedback to the RBI on all the 3 items, and we'll see as to when and in what shape are they implemented.
How do you assess the tone on liquidity front? Because an assurance has come from Reserve Bank of India governor, but there are no additional tools which has been announced in the policy.
So I think the assurance was very clear cut that whatever liquidity is needed by the system, we will provide. And they've already shown prior to the policy by taking a series of steps which has helped to provide adequate liquidity in the market. And since it is already achieved, going forward also between the policies, in case there is a need, and generally what we see in March, because of the expenditure and the money going out, there is sometimes a liquidity mismatch. I'm sure the RBI will step in and provide with the existing tools whatever liquidity is required. I think the existing tools are also adequate to address if they are used in the appropriate manner, which is what he has assured.
Right. There was also an announcement regarding the domain which banks need to shift to arrest the digital frauds. Has there been some conversation with the regulator already on this?
So there has been some meetings which they have called, and our teams from the IT department have participated. So this was known to us. I think this is one of the series of steps which the RBI is taking along with the government and involving all the market participants, including the banks, to make sure that the digital frauds are reduced and prevented. This is not the final step. We will probably need to continue taking more steps. But I think in terms of people getting, logging on to similar sounding or similar looking sites, this can go some way in preventing that and giving assurance that these are the genuinely whitelisted sites. So the full details are not known to me yet, but I think, as he mentioned very clearly, that from 8th of April, the registrations for banks will start, and followed by the other market participants in NBFCs, etc. So I think this is a clear-cut step which is going to be implemented. And we will work with RBI on this to make sure that this is implemented and the customers are kept safe going forward.
Right. Let's also talk about the facts which has not happened. There was also some anticipation of CRR cut in the policy which has not come in this policy so far, which was announced earlier in the December monetary policy. How do you assess this? Do you think that there are more options which needs to be applied by Reserve Bank for the liquidity?
So I think, as I mentioned earlier, a lot of steps were taken prior to the policy in the last 1 month leading up to the policy to improve liquidity, and which have worked to help liquidity. CRR cut is not to be easily taken. So it's a kind of a irreversible step. You can't reduce CRR one day and then go back on it after some time again. So therefore, the other tools which the RBI uses, the OMA purchases and so on and so forth, I think those are more regular tools which helped in addressing the liquidity, and they have already done so. So I think in that sense, the requirement of a CRR cut perhaps wasn't there. And in any case, we were not expecting that to happen. It hasn't happened yet, as yet.
Right. If you read overall a policy statement, there have been mention about efficiency in the economy. Do you see that although the MTC framework targeting is inflation, but you have to keep growth in mind? And in this policy particularly, the shift is towards more on growth side?
This is slightly unusual that the governor should talk about balance between regulation and growth and all. But I think it was entirely needed, because it's very important as to what the RBI's head is saying in general. And therefore, his language of maintaining that balance, that while regulation and compliance and conduct has to be kept in place and has to be followed, but at the same time, the efficiency, the growth, and all of that has to be considered. And overall, a balance is required alongside the stability. So I think it's very, very welcome, that kind of commentary. And in terms of actual steps, we will see as we go along as to how they pan out and what are those steps which the RBI takes. But I think the commentary overall was very, very balanced and very welcoming.
All right. Thank you so much, Mr. Tewari, for joining at this hour and explaining the context of monetary policy and also its impact. Thank you so much, viewers, for joining. And it is the time to break at this hour. The news coverage on monetary policy will continue after this break.